And that sound means we are now live here on our halftime report, Tackle Trading's daily show where we go through market analysis, look at the charts, break down the news, the information across indexes, commodities, currencies, cryptocurrencies, companies, corporations, as well as stocks out there in the news, and kind of provide you guys with some insight out there as we look at the markets. We've got a full crew here today. We've got Coach Matt, Coach Mark, myself here, your host, Coach Tim Justice, and Cody on the back end producing. It is Monday, 10/5/2020. Markets are up. A couple things we're going to be talking about today, more stimulus conversations about what may or may not happen, some hope on the horizon in that front, at least from the chatter. We'll get the coaches' take on whether or not that's real or not, what they think of it. DraftKings issuing some shares. I understand it with a company that has had a run like they have. We'll break down the chart, the market reaction, and the news on that. Positive news out of certain companies. We had some M&A activity out of Bristol Myers. And yes, President Trump seems to be somewhat recovering from his COVID outbreak. And there's some news around that with some of the companies that have given him the drugs, including Remdesivir, I believe. Let's get Mark and Matt in here. Matt first. Matt, how are you doing today on a Monday morning? And you on mute, sir.
That is right. I was on mute. Tim, I'm doing good. Excited to be here to break down the news of the day, and quite frankly, to get our community prepared for the week this week. I think this week's going to be a very technical week with some degree of uncertainty out there, obviously, as we're approaching the election and with the president now coming down with COVID. And, obviously the market is keenly aware and interested in that storyline playing out as well. So, but more than anything this week, there's a very light week economically. There is not a lot out there. We did get a positive economic report today on the ISM service report we got earlier today, and that was positive. But outside of that, we're really looking at a technical week. We do have Fed on tap. You got Jay Powell giving a speech tomorrow, and then obviously the Fed minutes on Wednesday. But overall, I mean, right now there's not a debate we have to navigate this week. There's not a lot of geopolitical situations this week. There's not a lot of economic reports coming out this week, and not just in the U.S., but around the world. And quite frankly, there's not a lot of important, well, let me put it like this. There's no important earnings reports. We have dominoes and whatnot, but not to the market. This week, I think it's a technical week, and I'm excited for it.
I'm very excited for it as well. And obviously, I mean, I like technically driven markets. That way you can kind of just focus on the charts, take actions when they're there. And there's a lot of great setups. I went through and reviewed the reports over the weekend, and just a lot of great candidates from the tackle trading coach as well. Kind of still feels like a stock picker's market to me, guys, where if the opportunity is there, you pull the trigger, and that's kind of how we've been for a while. Let's break this thing down from a technical perspective. First off, Matt, and kind of give me the support, the resistance, what you're seeing in momentum across different time frames. And let's do a thorough analysis on this one.
Yeah, let's take a look at this. Right now, the market is and stop me if you've heard this before, we're threatening that breakout right there at 3,400, and I'll break that down to an individual specific level here in just a second. But let's look at this from a broad perspective first. Last week, we really saw a little bit of a choppy week, but overall, you got to be impressed of the defense it played last week. And, when we got the news late Thursday night, early Friday morning on, the president coming down with COVID, obviously there was a market response to that. And the news really came in the middle of the night. So not a lot of people really were aware of it until, we woke up on Friday morning. Now, for someone like me, who's a night owl, who's always constantly up at night, I was looking at the market on Thursday night, and, I wasn't in front of the market, but once I saw, the news came down that the president did get COVID, my first thought was obviously, the well wishes to the president, hopeful for a speedy recovery here. But then I was thinking, okay, how's the market going to interpret this type of news? And obviously the market sold off initially, but what was impressive and what I saw all week last week was on any downward movement in price, well, you really never saw anything sustained to the downside. You saw a couple moments in time last week in this choppy, it was really flat for the week, but it was choppy. And most of the times when it came down, like it did on Tuesday and Wednesday, and obviously on Friday of last week, it came down pretty aggressively just in the short term, but then it double bottom right there at 3,300, and it, found that support level at 3,300. So even though we had a choppy week last week, you gotta be a little impressed with the resiliency and the defensive nature of the market last week. I mean, think about the overall news headlines we were navigating last week. And by the way, spoiler alert, those are going to be the same headlines we're navigating this week.
A lot of it's rinse and repeat for sure.
Yeah, it's a little bit old hat here, and it's obviously the market's getting a little bored of it, but stimulus talks are in the vein of thought this week as well. But think about that from last week's perspective. Are we going to get stimulus? Are we not going to get stimulus? Are we going to get stimulus? Are we not going to get stimulus? And for most of the week last week, I just felt like even if we didn't get stimulus, that the market didn't have that much downside risk, because and I gave the analogies of the trade war over the last few years, how the market would buy up the hope, but then it wouldn't sell off the result. And we saw that with the stimulus discussions at the end of July, early August, where you bought up the hope and then you didn't sell the result. And so I kind of felt like the market had that backdrop to it, and then last week kind of confirmed that with the defensive nature of the marketplace. And now you're seeing it again, that same storyline play out, where you didn't get the stimulus last week, but the market played defense. If we get stimulus this week, you want to be in the market, guys. And I'm not saying we're going to get stimulus, but as I said last week, I think as long as they keep talking, and these deadlines, these arbitrary deadlines they keep putting out there, obviously mean nothing to the analysis any longer. Because even as of today, there's talks that Pelosi and Mnuchin are talking more about stimulus. And over the weekend, the president was tweeting about the need for more stimulus. And so, with the personal interaction Trump has now had with COVID, maybe that does change his philosophical viewpoint to a certain extent. He was responding to that from a stimulus perspective, a little bit more positive, on his social media accounts than he was before that. So, there's a lot of hope right now. I'm not saying it's going to come to fruition. I'm just not sure the market sells aggressively if you don't get stimulus.
Yeah, I don't know if it will either. I've been debating that and even discussing it with you guys internally for quite some time. We did see it like in the August deadline. We talked about this last week as well. It ramped on that. I know it was a different environment, but this could be just that kind of environment. I mean, if you break out technically, I think you have to respect the breakout regardless of the headline. I know that can be hard to do, especially for analyticals, who want to know the news and the fundamental backdrop and have fundamental conviction. But Matt, a breakout is a breakout is a breakout, and even if you don't get that deal, I mean, breaking out here.
Get it. Totally get it. The president got COVID and it was announced late Thursday night, guys. We've had a grand total of about 8.5, 9 hours of market data so far. The market's up.
Yeah.
It's up since that time.
Although I did read a headline that oil is up 5% because the president might leave the hospital. I wasn't sure I trusted that one there, Matt.
So I don't know if I trust that one either. No. But all I'm suggesting that you do have, if we don't get stimulus, obviously there will be a shakeout, right? But if the odds are 50-50 of stimulus, and those are just my odds at this point, I've been constantly increasing them up. But even if it's 50-50 at this point, you want to be in the market if you get stimulus. Can we all agree with that?
I agree. If you get a stimulus deal, I think you want to be in the market. I mean, Mark, do you agree with that analysis?
Oh yeah, if you get stimulus,
okay,
and so, as long as it's not a here's 500 billion as a piecemeal.
Oh, it's not going to be five. It's going to be somewhere around 1.8 to $2 trillion. I
was going to say there's going to be a T in front of that. There's no.
Yeah, there's definitely a T in front of that. So again, my perspective is very simple. And it's like a trade. You're looking at a 50-50 situation on a trade. And you're like, okay, I might not love the probability, but I love the return if it plays out versus the risk. And that's kind of how I see this situation play out right now. Whereas you might not love the probability of a stimulus deal getting done. And we don't love we don't love the analysis that we need a stimulus. But if you don't get a stimulus, what's the downside?
Well, you mean price perspective?
I mean, maybe no, just and I want to hear yours and Mark's opinion. If we do not get a stimulus deal this week, what's the downside?
I'll take the positive part of that, and I'll let Mark play the contrary on this one, because I think that's where our views align, and I'll let Mark.
Well, you're
speak for
assuming
himself.
Mark's a contrarian.
I'll let
there.
him speak for himself, but I will say this. In my perspective, the market probably would shrug it off in this regard. I think even if we don't get stimulus before the election, we're going to get stimulus at some point. So whether the market gets paid today or gets paid in December and see all the money coming in, I mean, if it's post-election or pre-election, I don't know if the market really cares. And I don't think the analysis really changes. Doesn't everybody believe there will be a stimulus package at some point? The timing is really the only question here, whether it's pre-election or post-election. So I honestly don't think the market would price in a huge drop because of that, because it's like, okay, we'll get it eventually, you know? So I don't know.
Well,
Mark?
I mean, well, eventually we're going to get a stimulus deal. Everybody knows that. The market knows that. So there might not be a big drop, right? It's just, if you don't get it this week, I mean, how many artificial headlines can be created? Because a ton were created last week. You know, more stimulus, hope, more stimulus. Can those headlines be created indefinitely? I imagine they could. So, you know, I mean, it's the old trade war, right?
Mhm.
Where we
Guys,
would see
a
that
photo
type of
op
headline
gave the
recycled.
market confidence.
So
Think about that for a second.
Yeah.
A photo op gave the market all the confidence it needed to buy up. I just don't feel, and obviously with unknown variables, you know, those are concerning. I just don't feel at this point, if the market goes down, it's going to be on the lack of stimulus.
I want to counterpoint on Mark for a second, though, and I don't want to have a big debate about it, Mark. I just want to think. I want to think through this out loud. What if maybe the market volatility in the last couple of weeks has nothing to do with headline news and all the positive kind of hope around that kind of stuff, and really it just is about money moving back into the market from the massive outflow? So you had the correction, you had the 10% correction. The people who wanted to get out got out. Now the money is now starting to come back into the market in inflow. I mean, could it just be algos and demand coming back into equities? Because that weekly chart, we always, and the daily chart is fine, you know, Matt, but the weekly chart, everybody I've ever, you know, known would say that's a beautiful chart, you know, especially on the
waiting
NASDAQ.
on confirmation.
Well, on the NASDAQ last week confirmed, Matt.
Yeah.
You know, so Mark, could it just be that money's coming back, you know, and seeing an opportunity on the,
well, I mean, it's the old argument of, you know, there's nowhere else to go. You know,
yeah,
it's the whole Tina argument, right? And so, you know, even at high valuations, even to that, I just like all of my ducks lined up. Like I'm still a cash flow bullish trader, like I always am. I look for opportunity to add bullish exposure. I'm just going to cover my positions, and if the market rallies, has this like huge rally, it's one of those situations where, hey, I made money, could have made more, but you know, like I want the sentiment, and I don't see the sentiment there still. I mean, I see the technicals. Technicals are actually constructive and improving consistently. That 3,300 level that was tested 3 times on the intraday chart, bounce, right? And when those intraday levels are tested multiple times, you get nice little rallies off of that. So technicals are getting constructive. We do have some resistance level right overhead right now. It's going to be interesting to see how it tests in that range. But before I get like really exuberant and doing more than I would normally do, I just like having it all lined up. I just like having it all lined up, and that would require a stimulus deal getting passed for me.
Well, from a technical perspective, if you like it getting all lined up, you're starting to see it, guys. Again, we're back to that threatening of the breakout of 3,400, but you break out of 3,400, you got to be triggering on that daily chart. If you break out of 3,400, the weekly chart is confirming. You break out of 34, well, actually, you break out of 38 at 3,390. You're talking day traders start to jump on that bandwagon, and so I just feel like the technicals are starting to align a little bit. And I also kind of feel like, given the fact that the market played defense in the face of, you know, are we or are we not going to get stimulus last week, that the market still played defense. So I just feel like, you know, we're a pitcher on the hill and we got a nice little backstop right behind the catcher. And if we throw a wild pitch, we still got a backstop. And so I just feel like the defensive nature of the market last week does give me a little bit more confidence. Now, I don't think you should be aggressively front running it in any capacity, but I do believe given the backdrop of the defensive nature last week, given the lack of economic reports this week, the lack of geopolitical situations this week, the lack of, overall earnings this week as well, if you do break out to 3,400, you got to get bullish.
Can we start admitting that the market doesn't care much about this virus anymore? I mean, at this point, and they may care about it in the future if we get further outbreaks and shutdowns and all that kind of stuff. But Mark, could you imagine the headline from 1 second, Matt? Can you imagine the headline, Matt and Mark, in April that President Trump got COVID? The market would have been down 10%.
We would be limit down.
We would have been limit down. Mm-hmm.
Yeah, I do agree with that. I think if Trump comes down with COVID in April, May, March, during that initial first wave outbreak, you would be limit down in the market.
Mark, what are your thoughts on that?
No, I mean, I think it is a accepted dogma at this point that we're going to have a vaccine. There's too many companies, too many vaccines, too much progress made it over. I think it's accepted dogma now that not only we're going to have a vaccine, we're going to have multiple vaccines. For COVID-19. And I think that's just accepted. I mean, I know I trade accordingly when I do epicenter stocks. That is front and center is like, yes, it's crappy times for a lot of those epicenter stocks right now, but
would you also agree with this, Mark, that it's not only accepted dogma, but it's also accepted that it's not going to happen this year?
Yes. No,
okay, so everybody in the actual marketplace believes it's happening in the first to second quarter next year, correct?
Mm-hmm. Yes.
Mm-hmm.
Yeah.
No,
I mean, honestly, guys, that's what I work under. I work under that prep position.
I mean, like when the market was down on Friday, I mean, I sold a naked put on the Qs because I do believe, my fundamental thesis, we are going to get a vaccine. Federal government will provide stimulus. And it will be a massive amount to tide us over from an economic standpoint from now to then. The Fed's there, right? They've said, that we've done all we can do, but that's a constant. You don't have to worry about the Fed raising rates, and you don't have to worry about the Fed, getting hawkish, maybe one day, right? But not anytime in the relative future, right? And so, you have all of the, how I like to joke about one crew. I mean, for me, I just need that stimulus package to pass for me to get really, really excited, or I worry about a technical reversal on it. But I'm still going to be bullish because this market is all about liquidity. I mean, that's the only thing that matters to this market right now. It's the only thing that probably one could argue has ever mattered to the market since the crash of 08-09. Is probably the only thing that's going to matter to the market in the future. And liquidity is going to be there. And so it's just a matter of when, right? Does it happen this week with stimulus, or does it happen in January?
I work under two assumptions. Assumption number one, we will get another stimulus still. It's just a matter of timing. Okay. Mm-hmm. And the I was going to say quality of it, but I don't think that's the right word. But the length of that stimulus still will depend on a little bit of what happens in the election. Okay. So in terms of this, but I do, regardless of what happens in the election, I do work under the assumption that we will get a stimulus, number one. Number two, that we will have a vaccine at some point in the first 2 quarters of next year, a working vaccine. And I think the market works under those two assumptions as well. And so everything in between now and then, I think to a certain degree, and why the market has been so resilient is because it's just noise in between now and that moment in time. Whether it happens, this week on stimulus or in a month from stimulus, I do believe the market is working under the assumption that there is a stimulus deal at some point coming in the future. Mm-hmm. So obviously the election throws a little bit of a wrench in that analysis, but that's the two assumptions I do work under, and that helps me personally understand why the market doesn't price in a little bit more of the risk, because the market's working under those two assumptions. And then we have, the king of the country, Jay Powell, giving a speech on Tuesday, and then the monetary minutes being released on Wednesday. And I think those two events are going to be fairly important to the market in the short term.
Mm-hmm. Yeah, and those news headlines, obviously, we're going to be tracking through the week as we get developments and whatnot. But really, I mean, the first signals are going to be on the technicals for me, Matt. I do think this market is technicals first, and then these conversations, if and when they come to fruition, that's second to me.
Let's take a look at the technicals from a multiple time frame analysis perspective. Number one, let's start on the shortest time frames on the daily chart here, looking at a 5-minute chart. Now, obviously, you got certain moments in the day throughout every day that are going to be very, very important. If you're not familiar with how the futures market works, that time period between about 2 a.m. and 3 a.m. Eastern Standard Time, which coincides with about midnight to 1 a.m. On my chart because I'm in the Mountain Standard Time. That is when the European markets really start opening, and that's when you get your first major movement in the market. The secondary movement in the market happens during when economic reports come out in the morning, right along in conjunction with the cash open right there at 7:30 a.m. my time, 9:30 a.m. Eastern Standard Time. And so when you're looking at this from just a technical perspective on that, from the futures market open yesterday, that didn't really have a lot of activity on the futures market last night. You really saw the movement happen on the cash open this morning. And so on the cash open this morning, right here, you saw that initial upward movement in price, obviously, breaking out of overhead resistance on an intraday. You snap back, retrace, test that breakout channel at 33.65, and then you're off to the races once that is confirmed. And so once you see that snap back retracement, it confirms against the same resistance level it broke out of. That gives those day traders a little bit more confidence to start pushing their chips into the middle of the table. Price appreciation, you come to the middle of the day. A lot of times during the middle of the day, you get this lull in the market. You get an initial surge one way or the other at the cash open, and then it gets a little bit boring and it consolidates, and that's what we're seeing here today. I do think the last hour of the day is going to be fairly important here today. If you do see another surge break out of that 33.88, 33.90 level, which I feel is fairly important for those short-term traders, because not only is it acting as a overhead resistance today after the nice price appreciation we had earlier today, that's right where you see that, from last week, that's right where the overhead resistance really kind of played out all last week, was right there at 33.88 by 33.90 as well. So if you can break out above that, you should see the market test that 3,400 level, which is very, very, very important. It goes without saying how important that 3,400 level is to the market. Now, 3,400 is the number I give it, but it is 3,400 by 3,420. And so when you're looking at that 3,400 zone of resistance, if you can see some follow through to the cash open coming into the close, we could have a nice little week in the market this week. Now, obviously, we got to see it confirm, but on that daily chart, if you see that breakout of 3,400 and start to see some momentum behind it, market from a technical perspective until you start getting into 3,500, which is a significant hold number. And for Team Tackle out there, obviously they know the importance of these significant hold numbers in this market right now. But even at 3,500, there's not a lot of historical evidence of that acting as a support or resistance zone. You really don't have anything approaching an actual technical resistance zone excuse me, until you get up into those all-time highs at 35.87. And so for me, with working under the assumption that we will get a stimulus eventually, that we will have a vaccine eventually, and then technically, if you do see us clear 34 by 34.20, there's not a lot of room to the left of the chart to really stop this market. Now, obviously, it goes without saying that anything can happen. We're in the last month of an election, which is crazy train analysis. But to me, if that level fails, those day traders are starting to buy, those swing traders are starting to buy. And then the prettiest chart in the market, somebody find me a cleaner, better chart than the weekly chart on the S&P 500 and the NASDAQ. Both these charts are just looking and screaming buy, in my opinion. So obviously it's very difficult to just discount the day-to-day news headlines. And guys, I swear to heaven, unless you're getting your charts from Frank at Team Tackle on Twitter, don't get financial information from Twitter, because it will cloud your judgment. even the hardest, hardest technicians out there, if you start to, overanalyze, well, what about this person on Twitter and what about that? Oh man, it just gets crazy train out there, especially in the last like 72 hours. So to me, focus on the chart. The chart prices all of it in. Focus on the chart. You see us clear 3,400, we should see some price appreciation.
By the way, Frank is a fantastic follow on Twitter. I don't know if I
beautiful chart.
I mean, he does great with charts. Obviously,
I kind of feel like he's my personal scanner sometimes.
He's good at scanning. There's no
he
doubt
is
about
so
it.
good at scanning. He loves scanning. He geeks out on that stuff. Like he finds a chart in his personal trading. He's like, oh, I got to share this with the community. I just love this.
That's right. At Tackle Trading on Twitter, by the way, if you are on that medium, make sure that you come and follow Frankie on that. But the S&P obviously looking beautiful this week. NASDAQ was looking beautiful last week on the weekly. They both kind of have similar. The only two index I really care about right now are the NASDAQ. I know the Russell's up nice today, but frankly, I think it's the NASDAQ and the S&P and everything else. Yeah.
To me, I work under another assumption I work under is we have two major indexes. We have the NASDAQ and we have the S&P, and then there's everything else.
Yep.
Right. There's everything else. NASDAQ, S&P. I personally like the trigger on the S&P a little bit better. However, when you're looking at the daily chart on the NASDAQ, don't you gotta be a little excited that the snapback held the moving averages and you're starting to establish a higher level of support, a higher low? You got to be a little excited about that one as well. But for me, everything starts with the NASDAQ. Everything starts with the S&P above 3,400.
Yeah. And I would have understood caution on Friday with the NASDAQ, Matt. Even I had a little bit. I took a little bit of profit off the table, and whatnot.
Listen,
but
there's not one problem in the world in the face of what we saw on Thursday night and Friday with that to say, let me lock in a little bit of profit, take out the risk of the next 48 hours coming into the futures market on Sunday. There's nothing wrong with locking in profit on a Friday. But then again, Tim, you could have said that at any Friday in the last 3 years.
Well, I think part of the factor with me was also we were going golfing and I did not want to have to think about it. We enjoyed that golf.
We had a good front nine.
Yes.
Well, we won't talk about the back nine.
They do count 18 holes.
No, they don't.
Scorecard.
No, they don't.
Yes,
they don't.
Yeah, our stamina was not there, Marky. We were -7 on the front. We were even on the back, and that's not exactly. We could have won that tournament if we replicated that front, but c'est la vie, brother.
I did stick 180 shot on a par 3 to about 3 feet for a birdie though on the back.
Yes,
I did that. I
did do that. Yeah.
Golf's fun. I won't talk about all the other shanks I had. I'm just going to talk about the one shot that I can remember, and that was when I stuck that 7-iron.
Right. Yeah. Dude, that's what golf is, though. That's what gets you coming back. You have a great shot, and you're like, "Holy cow! I'm pretty good at this. I could do if I could do that every time. Just imagine." And then it just doesn't work out.
Oh, we were with two other people.
The same way trading is. It's that one good trade that makes you like, "Oh my god, I love this," and then you make some bad trades, and you're like, "Oh, but that one good one." Keep you coming back.
Yeah, that's right. That's right. We had some fantastic partners as well. Got to play with our brother and got to meet a new guy who actually was a veteran of our Marine Corps, Matt. And he was, he told quite a few stories.
I loved his stories. I geek out on military stories though. Mm-hmm. I think if there's one thing we Americans should always agree with is support of our armed forces and our servicemen and women around the world. And I that was the first time we met him, and I just absolutely loved him. I thought he was amazing. But he said to me during the tournament, he says, "Hey Matt, have you ever broke a club?" And I looked at Tim. I said, "Tim, have you broken?" He's like, "No." And Mikey says, "No." And I said, "Have you ever broken?" He's like, "No." And then everybody's looking at me. "Matt, have you ever broke a club?" I'm like, "I plead the fifth."
Now, listen. How many clubs have you broke? Is my
on purpose? Question. I've never broke a club on purpose myself. Matt pleads the fifth.
I want to change the subject.
I got a subject changer, by the way. Talking about golf, and that same guy, he actually had a very interesting job title. Team tackle.
Jared.
Hired.
That's my driver friend.
Right, left, right, left, right. That's right. Could you imagine getting hired for a company, getting a position, getting your business card, and Mark, the job title on his business card said,
lubrication
specialist.
I Wow.
He was an oil salesman.
I'll tell you, he's
sold
in
petrol.
sales, and I was like, oh, that is a great conversation starter, though.
Lubrication specialist.
Don't tell we'll talk about on the podcast about the other sales job we got on the golf course that day from what was it, Raymond James?
Dude,
it was Raymond James.
I've got two or three of the worst sales stories.
I'm just going to tell you guys, listen to the podcast this week. Tim and I will detail a story on a sales job we got from a Raymond James mutual fund manager. It was the worst sales job we've ever come across. And that, Tim, you and I have been in sales a lot in our life.
It's right up there. Yeah. I think the one I had at my house a couple weeks ago is close. We're going to have
I had to walk away.
I did too. I had to leave.
Both Tim and I simultaneously just walk away, and we both sit there on the green and we're like, I don't have anything to say.
That's right. That's right. We'll detail those on the podcast.
We'll detail that on the pod.
We'll do conversation as well. By the way, as we're talking markets, we're talking lubrication specialists. Give me crude oil next if you can. Our buddy.
Oh, look at that transition. Look at that.
Look at you.
Look at that transition.
Look at you becoming a real boy.
Well, tell me why oil's up 7%, because it's not because Trump is getting better. Let's start with that. I
just want to stick on your transition because I have zero analysis on crude oil.
I mean, what are you supposed to say, right? It's within a range. And this is the thing about range trading, and it drives momentum traders crazy, right? Is that when things are in a range, things can be very, very wonky. And just expect that, and then of course headlines have to create causation, right? We've been joking about that for a long time now, and they got to try to find something, right? That's the best they had. So that doesn't mean why oil is up today. It's just when things are trading within a range, don't trust extremes, right? That would be basically my 2 cents on it.
Support held, it rallied. We're coming back to 40. How about we add one thing? It just loves 40.
Listen,
40.
I've been saying I think crude is going to trade between 35.36 and 45.46 for the next long period of time. And there's going to be all kinds of headlines. Why crude's up or down in a day? It's just really going to be range bound. And I really believe that until we get a legitimate get over COVID, life gets back to normal, people travel more, people fly more. And I think you're looking at a really, really long range until that happens.
Mm-hmm. Maddie, magnet at 40, a lot of range bound analysis here. Anything you want to add to crude?
Crude is quickly getting into the natural gas do not touch territory. It's trying its best to get into the natural gas analysis. Especially when on a day crude's up 6.5%, when you have increasing supply without a backdrop of demand. And so it's when you focus on causality, and that becomes an important part of your analysis. And I'm not saying it should or shouldn't. It does for me, it does for Mark, it doesn't for others. But when you do have causality and causation in your analysis, and that plays an important role, and you're looking at crude, I just don't understand it. Mm-hmm. I just truly don't understand it. I don't understand on a day when you have increasing supply by up to 500,000 barrels in a reducing demand environment, crude up 6.5%. It doesn't make sense to me from a logical, rational perspective. And so it's just, and I've seen this a few times on crude in recent history, and I'm sure you guys have seen it as well. It just doesn't make sense to me. And when it doesn't make sense to me, I have a hard time seeing it clearly from a bullish or a bearish perspective. And that's what allows me to see price movement from a logical perspective is causation. And so I just don't understand the price movement, especially on a day where it's like, okay, all right, crude's not up 6.5% because of Trump. That's not the reason. There's no logical rationality here. And so because of that, it's a stay away for me at this point. I got fooled on the bearish retracement. It's a stay away from me at this point.
I haven't traded crude in quite some time. I find better charts, things I can wrap my head around a lot easier. So I get it. It's not natural gas though. I mean, nat gas it's in a league of its own, brother.
Oh Lord Almighty, is it ever?
It has been
Let's
wild
let's
here.
take somebody give me your quick take analysis on this.
Hey, gap out, pull back to the moving. The 90 EMA held and it pivoted and confirmed. And it must
everybody besides a couple algorithms missed it. I think natural gas is a complete stay away at this point.
Yeah.
And I don't know what it would take for natural gas to come back into the lexicon of our analysis.
Yeah, I haven't traded it for a long time.
If it comes down to 1.5, 1.4, 1.3 again, I'll start bottom feeding.
Lows. I can understand that one, Chucky.
I'll start boomerang bottom feeding if it goes low, but I'm not chasing on trading.
Don't chase the highs. Get interested in 1.5.
Yeah, I mean, it's just I think it's a boomerang only product right now.
Oh, I can understand that boomerang style. Wait till the ultimate lows, then cash flow on it.
Yeah, I just think that's the only way you can safely play it right now.
By the way, let's keep flashing through commodities. And I also want to get back to a couple of things on the broad market that Mark brought up in pre-production. I do want to get the Bank of America analysis out there because I find it interesting.
And I do want to go through the sectors as well.
And the sectors as well. Give me a quick look at gold and the dollar, and then we'll come back to the market and the sectors. Then we'll go to individual stocks.
Yeah, dollar here clinging on to that 25.2 level. Remember what I talked about in this bullish retracement is that the dollar can come down anywhere above 25.2, and you're looking at that from a bullish retracement. We're looking at that moment right now. Now, obviously, the Fed this week with Jay Powell on Tuesday giving a speech, as well as the Fed minutes on Wednesday will play a role, but you don't have a lot of economic reports here this week. What's interesting and it's in that one of those make or break movements. Remember what we talked about from a confirmation perspective. Confirmation can happen on shorter time frames. It can happen on longer time frames. It can happen on a candlestick pattern. It can happen on a trend. Remember when you're looking at this from a reversal perspective, and that's what we have been working under the assumption that this is a reversal characteristics. You have your double bottom, head and shoulders, horizontal resistance level. You break out of that right there at the 25.20 by 25.25 level. It breaks out, it establishes a newer high at 25.60, and then you retrace. And you know what I said all last week was as you're starting these retracements, and this is why retracements are a little bit more difficult than breakouts are, is you have these multiple tests of support. Now, we have yet to confirm one test of a support level so far. And so your first test of the support level is right here at that 90 EMA, came down. Second test was right here at the 20 EMA, came down. Now you're at that last ditch support level to see if we are truly going to confirm this as a reversal trend, is if that holds that 50-day moving average as well as 25.20. And so you're still slightly bullish on the market in the dollar, but if it does come underneath 25.20, that's no longer the case. And so you're looking at more back into some degree of neutrality at that point. So from a dollar perspective, we're looking at this as a bullish retracement as of now that have yet to confirm at any support level. And we're at one of those last support levels right there at 25.20, which coincides with the old resistance level. It's right where the 50-day moving average is. And so if we do get it back underneath that, you're back to some degree of neutrality in the dollar. And it will play a larger role in my analysis on gold than it will on the actual individual currencies. But right now you're still looking at it from a bullish retracement, but you're a little hesitant, a little cautious because you have yet to confirm. And the problem right now, when you don't confirm on the 9, which is your momentum confirmation from a trend perspective, and it comes into that traditional 20 and doesn't confirm at the 20, it leads confirmation to be a little tricky. And so to me, it still has to confirm above 25.40. And so let's see how it handles the 25.20 by 25.25 level. Ultimate confirmation on the bull side would be 25.40. I think we're waiting until Wednesday to see that though.
Mm-hmm. Yeah, and
that was great analysis on the dollar.
Mark,
yeah, I'm sure you really enjoyed that as you were getting your mid halftime report snack.
Oh, this is when I eat breakfast. Is when you start dollar analysis.
What's on the menu today, Marky?
I made myself an omelet. So I It's leftover omelet from yesterday.
I was going to say, when did you make that? Because that looked old.
You know, it's leftover omelet.
Did you make that like last Monday?
No, I made it yesterday. I put in all kinds of healthy ingredients, spinach and green peppers, because I'm not feeling well. So of course, when you don't feel well, that's the one time I eat well. Try to get good nutrients in my body. I should do that every day, right?
Dude, I love spinach and eggs. I think it's fantastic. So I'm glad to hear you're eating healthy, and hopefully you do get feeling better. But that gave you just the amount of time you needed.
It did. It was perfect.
Go and heat up that
It
omelet.
couldn't have been better.
Yeah,
It was. I really went into the detail on the technicals because I knew you needed a little bit more time to warm up.
I do appreciate that. That is some brotherly love right there.
That's right. That's right. By the way, that gold kind of just inverse relationship on that chart there, Matt. And there's still so many levels in front of this that it would have to clear before it's just got bullishness all over it.
Even if it clears, you're waiting for a trend confirmation. Yeah. You honestly got some time on gold.
I think so too. Yeah. Yeah. And you know, quite frankly, if you went down to an intraday chart, 1920, 1960, 1980, 2000, whatever would happen, like you're talking about, have to break out, pull back, and develop a trend. So even if you do get the upward mobility, time, right? Patience. Yeah, I'm with you.
Where's your target?
I'm with you.
What's your reward to risk ratio?
Right.
50-50 probability on a 1-to-1.
Right.
You can't do that.
Right. Back on the S&P for 2 minutes here. I got to get Mark's analysis. I refuse to not get this, and I did skip it earlier, Marky. I do apologize. Marky, you had a note from Bank of America on their price targets. We know Wall Street firms do talk about price targeting through the year. They talk to their investors. They throw a number out there. Can you give us that update and let's talk about it?
Yeah, their Bank of America's price target is between 2,200 and 4,000. And I'm not joking. They are basically that price target is the Wall Street way of saying we don't have any idea how this plays out in the short term.
So these are people who get paid to do thorough market analysis, right? You know, they're analysts, and they said our target is anywhere between 2,200 and 4,000. And they okay.
Well, they read the bear porn newsletter from a few months ago, and then they're like, "Oh, there's a lot of liquidity." I don't know.
I was about to say exactly what Matt just did. Is that like within the entire probability cone, like 100% probability cone?
That's in the like the 95% range on the probability cone. Just golf clap, Bank of America. Good job. Good job.
Did they give any detail to the analysis?
It doesn't matter. I mean, you do not want to hear the detail on that analysis. You do not want the detail. That is as bad as the Raymond James sales dude on the golf course who was trying to get us to buy into his little mutual funds when he was like, any old 401ks, guys? I know everybody got laid off this year. Any old 401k guys?
Mark, you know how like at a ball game, somebody will be barking for, hey, I got beer and hot dogs.
I got old 401k guys. I got old 401ks.
Anybody want to roll over 401k? It was so bad. But that wasn't the worst part of it.
That wasn't the worst part. We can't say the worst part on the halftime report, because then he starts literally in the conversation. Hey guys, so this is like literally 45 seconds into this sales job. Hey guys, you know, me and my buddies, I know this is a bad word in America today, but we say it all the time. And then he said the word, and both Tim and I look at each other and be like,
that's not exactly a sales.
We're out.
Yeah, I'll see you later, dude. Oh, it was so terrible. I'm laughing at it now.
Terrible.
I was so upset at the time.
I was like, honestly, I don't get offended very often. It takes a lot to get me offended.
Yeah.
I was pretty offended.
Yeah. I was pissed, to be honest. I'm like, I don't want to ruin these people's nice golf tournament by throwing this dude down.
I got within a hair of destroying that guy's literal mental fictional world. Like literally, I got so close to going old school Matt and literally going into, I want to destroy something beautiful. And that was not beautiful. And I just wanted to destroy it. So I had to walk away. It was bad.
I have no words right now either, because I'll have to say it for the podcast.
And yet, Bank of America, that you just tried to one up that
dude, they should hire him. He could probably do kind of analysis. Wow. I mean, Easily, 2,200 to 4,000. Mark, in your opinion, is this just a reflection of banks and whatnot not knowing how to read the fundamental backdrop and throwing a fit? I mean, is this some kind of
No, you don't do this. There's no analysis that needs to be said. You don't do this.
Listen,
You're a professional. You're a bank. People go to you to get proper analysis. That is make believe nonsense. I mean, say there's uncertainty. There's nothing wrong with that. Say there's unknown variables. Say there's a major election. Say you might want to be risk off. Say you might want to be risk on. Say you might what you don't say we have zero clue.
Yeah.
That is essentially, I mean, because that is essentially the playbook I operate under on the, like, they might as well have said, listen, the only thing we really trust are 10 delta naked puts. I mean, that's
but
they might as
that's
well
obvious. They don't even know what delta means though.
So listen, there's a lot from a fundamental perspective. I mean,
it's bad.
We know this, how this plays out. Stimulus will get, I mean, that is essentially saying we don't believe a stimulus deal will ever get passed. We believe that the Fed won't be accommodative. 2,200, like, I mean,
I'm sorry, I'm going to say it. That is some individual at the bank speaking their own personal political belief system. That's what that is. And it is completely wrong. 100%.
And flatly, and my instinct is they probably missed on the rally themselves. They're speaking their book and they're frustrated. I mean, that screams of like going on tilt, Mark. I mean, that's like somebody who's like, I don't know, 2,200, 4,000, whatever. Just throw it out there.
Well, I mean, if they were speaking their book, they would just say 2,200 or 2,500 or
no, are you kidding me? The individual's been getting emails, phone calls, text messages, why they haven't done anything in the last, why they're underperforming, why everybody else. They're like, this market's just absolutely crazy. No, this is that's an excuse is what that is. That's not analysis. That's an excuse. I just felt, honestly, when I could not stop laughing uncontrollably when Mark told me that. But I honestly, after I stopped laughing, my first thought was, I just feel really bad for anybody that actually gets that degree of analysis and they trust Bank of America to get.
Well, how are they supposed to do anything with it? Like,
what do you do if you're paying somebody that says, okay, anywhere between 2,200 and 4,000? Okay. Thanks.
Okay.
Appreciate it.
But we're also done because that's the dumbest analysis we've seen at least in a week.
It marks close to the
Levi Strauss's earnings are this week. We might get a recap.
Oh no.
Levi Strauss, the infamous people will buy more jeans in COVID take, their earnings are this week. So
that'll be fun. That'll be fun.
It was probably done by the same individual.
It's so funny to me.
They're on par.
We got to get back to our analysis though, and give some value out there. Break down the sectors for me if you can. We do this every Monday.
Yeah, and again, we're looking at this as a potential breakout right now. I personally believe it's a slightly bullish scenario. I personally, like I talked about all last week in the market, and the news on Friday does not change that, given the fact that on Thursday night, and again, don't get me wrong, guys. I totally understand and respect what happened on Thursday night, with the volatility of the president coming down with COVID and the announcement we saw on Thursday night. But guys, we're talking 30 minutes of price action that got gobbled up by the market pretty quickly. And so what happened last week really doesn't change my analysis on everything I said last week, talking about how if we see what we've seen all week long with the market playing defense, I do believe a 30 to 35 ranking in the market is where I personally would put it. And so I'm working under a slightly bullish type of bias here. I'm not saying front run. I'm saying get prepared. And what I've said for the last 3-4 weeks, Tim, you see a trade, take the trade, right? Mm-hmm. I don't think the uncertainties should stop you at this point from taking trades that you see have very, on a breakout, on a retracement, when you have an edge with a positive reward to risk ratio. And so in terms of that, nothing really changes my overall analysis from last week. I am slightly bullish in the market. I believe with 30 to 35 type of delta ranking is appropriate for this market. And if you do get a breakout, you got to push that up even more from a bullish perspective, maybe into the 25 type rankings where you're getting a little bit more aggressive, you're getting a little bit more open-ended risk graphs, you're not looking at protecting or hedging at that point. And so that 3,400 ranking or breakout does remove some of that, risk off personality in the market. So for me, I'm looking at a 30 to 35, most likely a 35 ranking right now. A breakout would push me into the 25 to 30 type analysis. And for those of you who don't understand those types of rankings, please go and get the Tackle Trading newsletter. You'll understand 100% what we're talking about. We rank markets from a 0 to +3 and a 0 to -3. We do it on a scoreboard. Let me just kind of show everybody, so that they can kind of get the visual. So when I say a 30 to 35, that's where I personally am in the market, is right into this range, 30 to 35. If we do break out of 35, that 3,400 level, I'm into this range. So as we start to see it reclaim those resistance, you up the probability scale of the bullish behavior. And why that's important is because the difference between a 20 and a 35 ranking for me doesn't go to whether you take a trade or not. It goes to how you approach the trade from a confirmation, a strategy selection, and an overall bias in your portfolio. And so for me, when I'm talking about moving up the ladder here, you go from 40 right now where Tackle has it. I was not in that meeting on Friday, but I totally understand what the coaches were looking at given the uncertainty of what was happening Thursday night. I just, again, all of last week, I was just like, I just don't feel like there's that much risk to the downside and it's going to be gobbled up. And so to me, I think I personally am a little bit more bullish than the Tackle Trading newsletter is. And so I'm in this range. And I think if we break out, you got to bump it up a little bit. And so I just wanted to quickly just explain what that 30 to 25 means when it comes to the rankings, because some people are not pro members here. And so in terms of that, I think you got to be a little bit more bullish. And then as we confirm that 34 handle, then you start to unleash it a little bit, open up those risk graphs a little bit. You're not hedging as much. You're not as concerned as much. Now, from a sector perspective, let's break down some of the sectors here. Now, communications, and let me take the probability cone off very quickly. Okay, communications, you do have a higher floor here that established last week on Friday, and now you're threatening that breakout right there at 64. A close above 64 here would be significant in the short term. So keep an eye. We're faded a little bit since the cash open here, but a close above 64, you got to call that confirmation. And so keep an eye on, I was talking communication, but I'm looking at basic materials. Keep an eye on the basic materials space. Now, not necessarily gold and silver, although both of them are having fine days today, but keep an eye on your chemical companies out there. The chemical space in basic materials is actually the biggest space in basic materials, and they have been hard chargers out there. So a breakout here at 64 would confirm this being a little bit more bullish. Keep an eye on the chemical spaces within basic materials specifically. Again, with the mining stocks, GDX, we love gold and we analyze gold and we love the miners, but the reality is the miners are a smaller portion of the overall basic material space. And so even if you do confirm on XLB, I still would not be looking at the miners in the short term right now because they are kind of performing with gold and they're underperforming the broad sector as well. So look at your chemical space with this confirmation here. That's what I would keep an eye on with confirmation of 64. Now, in terms of communications has been underperforming the broader market, both in terms of the downward movement in price and the recovery we've seen in the market over the last week and a half, 2 weeks. but you are now starting to establish a higher level of floor at 58.80. You have overhead resistance right there. I'm putting it right there at $60. You break out at $60. Obviously, you want to keep an eye on the Googles, the Disneys, the Netflixes of the world, those very popular brand type companies out there. So right now you're still in that consolidation, but a breakout of 60, a reclaim of that 50-day moving average, you should be off to the races. And that's the thing about technicals and trading. At some point, you had really good confirmation on Thursday of last week, obviously with the news of Trump getting COVID on the overnight action, that dropped that down underneath that confirmation. But given that backdrop, I'm still looking at that $60 trigger mark. So even though we technically did establish a higher confirmation at 60.45, I still think that $60 mark is the level that you're really looking at for confirmation on communications. That's right where the old resistance was. That's where the old support was. That's right where the 50-day moving average is. And without the news we saw on Thursday night, you probably would have seen some price appreciation coming into communication. So I'm putting that as a one-off type scenario. I'm looking at $60 for confirmation. And that's also about where you saw it come in today. The high of today was $59.91. And so, obviously $60 is playing a role in communication. Keep an eye on those big brand names that everybody loves in communications. If we do break out of that $60 level, industrials here, you got to be some degree of neutral here in industrials. You got a little bit of a different pattern. Ultimately, though, in this neutrality here, you got to be looking at $80. A breakout of $80, everything between $74 and $80 to me on industrials is just noise. You break out of $80, that to me is when you want to be looking at industrial stocks. And once you break out of that $80, looking at the weekly chart, you can see the consolidation over the course of the last month and a half in industrials. So anything between 74 and 80, there is nothing to see here. I gotta see, and I think Tackle needs to see that breakout of $80. And then if it breaks out of $80, at that point, then start looking at industrial plays, because you do have some pretty decent potential return all the way up to 85. Now, you might think, well, that's just $5 on an $80 stock. That's not big. Well, guys, that's actually really significant when you're talking about the individual stocks within that movement. And so I think we're going to have some fairly decent bullish opportunities once $80 is broken on industrial. So keep an eye on that $80 mark. Technology here, you got to be excited for what you're seeing on the weekly chart. You got to be excited the same way you're looking at the NASDAQ. On the daily chart at this point, you got to call 115, 114 and a half. You got to call that a higher level of support right now. And so even though over the course of the last 2-3 weeks, you're looking at net neutrality between really kind of 118 and overall underneath at 109.50, but you gotta like the potential breakout here. When you establish a higher level of support within an overall neutrality type scenario, that gives that breakout potential even more mustard, in my opinion, given the fact that you're running from a higher level of floor than you are when you're running from 109 all the way into that 118. You get a little bit overextended in the short term. It consolidates, makes another run, but this time, instead of running from 109, it runs from 115. You got a much shorter distance to run, which means you got a little bit of a higher potential breakout with some degree of momentum. So you got to keep an eye on technology right now. It is one of those areas of the market that we all know, it goes without saying, it can absolutely fly. And so even though you're looking at net consolidation in the last 3 weeks, I love the analysis that a higher level of support could be forming here. If it does ultimately confirms, you got to unleash the Kraken a little bit. You got to open up that risk graph a little bit if we do break out, because again, you're running from a higher floor, which leads to a little bit of a higher potential return there. So keep an eye on all those very, very, very popular tech plays. I'm not really seeing anything in staples right now. Even if it breaks out, what are you going to run into? Overhead, literally $1 above. So I'm not looking at staples or the stocks in staples from a swing trading perspective. I just think you just don't have enough overhead. You don't have enough room to run to justify that. So that's kind of a stay away. Your two non-swing trading type sector, and there are more than that, but your two major ones, utilities and real estate here. I think utilities, I think you got to add. I think you got to add to a portfolio utility play right now. Once again, it's neutrality over the course of the last 4 or 5 months. Utility stocks are really good for that. Utility stocks pay that nice little dividend. You can write covered calls on many of the utility stocks. Many of the utility stocks out there have weekly options, whereas 5, 6, 7 years ago, they did not. So I do think you want to have some exposure to utilities. It has traditionally played as a safe haven. It's not as volatile. And I like what we saw on Friday. I like the reclaiming of the 200-day moving average. I like the price appreciation above the 200-day moving average. And honestly, I don't care if it flies, but if it does break out of 62.5, there's not a lot of overhead until you get to 65.5, which is actually a fairly decent, sizable movement in the utility space. And it reduces some of the volatility in your portfolio, given the fact that it's just a slow moving beast in many regards. So I don't love the fact that it ran from so far to break out, but I do like the breakout and like the confirmation it's seeing today. Don't expect any great movements. It's more of a, hey, in a world of craziness, maybe getting paid a dividend and writing a covered call is not necessarily a bad thing. Healthcare, and I know healthcare had some news here today, with especially with our president and the utilization of the cocktail provided by Regeneron, taking remdesivir and some other cocktails out there. So obviously healthcare is in the news today, but this to me is all healthcare is to stay away from me at this point. It's very difficult to get a proper read on this sector right now. So I just think there's a lot better sectors out there. And then discretionary, the sector that I think everybody should get excited for right now is discretionary. It is a tackle trading, our highest ranked sector. I would put technology right there with it. But discretionary is our highest ranked sector, and you're threatening a breakout of 150 after a little bit of a head and shoulders type reversal pattern. And I hate to say that after only 2 days down, but that's kind of what I'm reading on the technical perspective. A breakout of 150 here has to be traded on discretionary.
Well, first of all, thank you for the thorough breakdown on all the sectors. You mentioned the strength in utilities. And by the way, they were one of the top performing sectors ever so quietly last week, and not so quiet here today as they're getting above those MAs. I like the read on that one as well. And I did hear a phrase that I liked in there as well. Release the Kraken. Is that right?
The Kraken.
Release the Kraken.
The Kraken.
I like it.
Unleash the Kraken.
That's right. That's right.
Got to open up that risk wrap, baby.
I mean, hey, listen,
got to open it up.
If the charts tell you to, you got to have that.
I want to know. I just spot poll here. Team tackle out there. Just yes or no. When I say unleash the Kraken, do you understand what that means? Yes or no?
I think so.
Swin got it.
Clash of the Titans right there. Swin, ding, 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 ding. First one off the bat.
You got to open up the risk
Pirates of the Caribbean.
Also Pirates of the Caribbean works as well.
Okay, also Pirates, but what I'm talking about is you got to open up the risk graph a little bit, right? When you're a little bit more risk off, risk adverse, you got to close that risk graph down. You got to hedge a little bit. You got to close it down. When you see the breakout, you got to open up that risk graph. And when you open up the risk graph, just to kind of to show you on the analyze tab here very quickly. So if I go out there and let's just say I sell a call option. Okay, let's just say that's what I do. I go out there and I sell a call option, and you see how the risk graph's kind of closed, especially if you do something like a naked put. So that would be a better example here. So let me take that one off. So let's say let's go with one of Mark's favorite strategies, right? So, Mark, give me a stock you like selling naked puts on.
Let's see. Well, let's stick with the utilities theme. I've sold naked puts 4 or 5 times this year on Southern.
Okay, so let's take Southern here, for example. All right, so a closed-ended risk graph. Let's say Mark goes and he sells a $45 strike price. Okay, so let me get a little So you see how the risk graph is closed to the right-hand side? That is a closed-ended risk graph. So when I said unleash the Kraken on that breakout, get a little bit more aggressive, what I'm saying is you got to open up the risk graph a little bit. And so a more aggressive strategy in that would be to go buy an at-the-money call option, for example, and then all of a sudden you open up the risk graph and you got that freight train going up. So basically, when I said unleash the Kraken, open up the risk graph, I'm saying you got to get a little bit more aggressive from a strategy selection perspective.
Mm-hmm. Dude, Clash of the Titans 2010 as well. I liked it. I love Release the Kraken. I think it goes on the bingo card for sure. It's got to go on that tackle trading bingo card. Ilka, if you're out there watching right now, can you send me an updated version of
that was so good.
Yeah, I would love to.
Tackle bingo.
Tackle bingo back in the day. Ride the Lightning.
I'd unleash the Kraken as the bingo. Bingo.
Mark's girlfriend. We had a bunch of them on there.
Yeah, he did a great job of that. But it's never easy when you have mixed time frame analysis. It's not, guys. If you think, I don't care who you hear talking on CNBC or FinViz or any article you're reading on CNBC or any news organization out there. I don't care if it's Twitter or Facebook or anybody posting videos out there. When time frames get mixed, it becomes difficult. Mm-hmm. Okay, it becomes difficult. When time frames are aligned, it becomes easy. And Mark, you've heard me say many times, especially as the market was showing on the downside, the easy money was already made. Now the hard money is being fought for. The hard money is still being fought for, but once those time frames do align, it gets a little easier. And so, to me, we're at one of those moments in time where it could get easy, and you got to get excited a little bit about that. And don't get me wrong, I can talk all day long. We got election risk, we got geopolitical risk, we got vaccine risk, we got COVID risk, we got Jay Powell waking up ornery on Tuesday risk, we got every risk out there imaginable. We got this. It's 31 flavors out there of risk, right? I get it.
None of that scared me except Jay Powell waking up ornery on Tuesday.
That's the one. That's the one.
No, Jay Powell. That scared the hell out of me.
But the reality is, some of those moments in time are your best opportunities. And so I just think with the market playing defense last week, you got to be prepared for that potential breakout. And to me, I think you got to be slightly bullish, preparing to even upgrade that a little bit more.
I think so as well. If you get confirmation, you release the Kraken. I agree. Let's go on to some corporate news items.
I love it. Unleash the Kraken is a breakout, and don't chase the dragon as you're buying an overextended breakout.
That's right. That's exactly right. I like it a lot.
I could understand why it would be confusing at some point, though.
Dude, I mean, not for me.
You got to have fun of this, guys. You got to have fun of this.
I got it. A couple of corporate items here, Matt, I want to get to. Let's start with DraftKings if we can. DKNG, very popular company.
Doing what companies do.
DraftKings sports betting company announced a public offering of 32 million Class A shares, half by the company, half by certain selling stockholders, and they're going to use the proceeds that it receives for general corporate purposes. Matt, raising some money after a huge run-up. What's your read on this?
We got a 38% retracement on the likes versus views so far. We need to get the likes up at Tackle Trading. We got to target that Goldilocks retracement, 50% likes versus viewing. That means 60 versus the 120 right now. Let's get those likes up a little bit, guys. DraftKings, this is what companies do, and this is what DraftKings should do. They should take advantage of this. And so in my opinion, I don't think you should overreact to it from a short-term perspective or a long-term perspective. To me, there was no trade to be added to here. You got to wait for a new technical setup to establish the stock offerings. I got no problem with DraftKings offering stock.
Yeah, me either. Quite frankly,
it didn't move the needle for me.
Not at all. In fact, I'm a shareholder, so obviously it affects me. They're putting more shares out in the market there, Mark. And, when you're the shareholder, you're like, oh, well, but I get it. I do get it. I think, this is the kind of proper thing a corporation would do when they need funds, when they're a newer company with a business model they got to prove out. So
And you know what? Yeah. The stock should be down on days it does that.
If it wasn't down, I would be scratching my head.
I would be like, I don't understand this.
Mark, what about you?
No, it should be down.
Into this?
Well, I mean, from a fundamental perspective, I already think DraftKings is really overpriced at this level. So
they were overpriced on the IPO offering.
So, I mean, I'm not going to chase it from a fundamental point of view. Trading, it doesn't matter, right? When you trade these kind of big things, I mean, they do affect shareholder value. Your shares are worth less today. But from a trading point of view, these kind of news things, we saw this with Penn last week. They get absorbed so quickly into the price action from a trading point of view. So from a trading point of view, stick with the chart, stick with the trend, make those trades.
Yep. It probably will be absorbed. We'll see it. We'll track the price action on it as well as we go. Another one, Matt, is kind of working through this here. AMC and some of the movie theaters. Mark, which of the movie theaters were the ones that you're interested in? I know one of them you like, one of them you hate.
I don't like AMC. I do like Cinemark.
Let's bring up
beat
Cinemark
up on
then.
my positions. Going to test my resolve on it.
Yeah.
So
Cineworld announced the closure.
What's Cinemark symbol?
CNK.
CNK.
Yeah.
That tells you how many times I analyze these companies nobody should ever touch.
More than 400 or 500 stores, Matt, were closed by Cineworld around the U.S. And in the UK as well.
Yeah, it's going to get worse.
They're under pressure here today. Mark, do you still have the same result you had?
Cases are rising in what? Like every state other than 3 right now?
No,
New York's thinking about shutting down again. The UK is shutting down. Israel is shutting down.
When you play
I can keep going.
Now, when you play the absolutely at the epicenter plays, airlines, hotels, movie theaters, casinos, cruise lines, when you add these need people, we use that phrase, they need people, right? Without people, they don't have a business. They need people, butts in the seats. And so it is all a question of liquidity. It is all a question, can they last long enough to avoid bankruptcy? That's the play. Whether it's Carnival Cruise Lines or United or Cinemark or Cheesecake Factory, can they turn the corner of COVID and make money and survive until they don't? There will be losers in these fields. Without direct funding, and these companies, the different industries, because airline gets all the news. These companies are all lobbying hard for direct assistance money from the federal government. It will be interesting to see which ones get it. Cruise lines for some reason kind of got to the front of the line. Airlines are at the very front of the line. They have like preferential stimulus treatment in the form of grants. Cruise lines seem to be really high up there as well. Some companies, some industries, I should say, will get it. Restaurants are lobbying hard. It's an interesting game, and it's not a game that you probably you've never seen it before in my adult lifetime. You'll probably never see it again, but it is can we wait out the pandemic? Do we have the liquidity? Do we have the funding to wait it out? And then, of course, if a vaccine comes and it's readily accepted, there's so many variables. I think it's fascinating theater, no pun intended. But the whole aspect. But it is not a trading game. It is not even an investing game. It's its own separate liquidity game that goes on with these epicenter stocks. They definitely fit into the spec bet, that phrase that we've been using often lately. Spec bets are not investments necessarily. They are not trades necessarily. They are bets. They are bets on like a return to normalcy, that there's a vaccine and that a company will survive.
Done based on technical analysis, Mark, and there's been no reason to do this on these companies for months and months and months, in my opinion. So these are complete stayaways on the buy side for me.
Anecdotally, we were sitting around playing cards on Sunday with Mom, and she says,
win again?
She tried
to shoot the moon every single time. What do you think?
Oh, she got greedy from
She's
her
getting
last
cocky.
experience.
Yes, she is. Yeah, she got a little bit aggressive, so she did not win this time. But
Tim, you should have saw Moo at home later that day. I just can't stand all you guys that tried to shoot the moon. I just don't understand it. I don't like it. You guys don't play your hand, and I'm just like, you're new to the game. Give it time.
If you're new to hearts and people are shooting the moon, I can see why it's stressful.
Listen, take the win.
It is what it is. Yeah. But Mom, she anecdotally, she's like, hey, should we go to a movie? She was talking to Moo, and Matt's like, no, you don't go to a movie yet. No.
Oh, no, that's not what I said. I said, Mom, you shouldn't go. I said, Mom, you're not taking my daughter to a movie, number one. But number two, you should not go to a movie. You shouldn't do that. And so they're gonna have a nice little movie night at home. And I think it's a lot better.
Yeah. Theater's under pressure still, obviously. And that's one of those days, Mark, where I'm seeing some things down that kind of fit in that theme here today.
Well, it's headlines, right? There are headlines specifically in theaters. There's headlines specifically in DraftKings. I mean, headlines are going to get you, in a volatile market. And speaking of volatility, VIX is up. You make anything of that? Market up, VIX up.
All right, I'm going to go get me a refill of my coffee.
Is this this is Matt's opportunity to take a little 1 minute break and get a new coffee refill? Do I make any of it? No, I personally believe the VIX is staying at elevated levels because they're pricing in premium and volatility risk for the election. And I think it's going to stay that way through the month of October. And then I think it'll fade, but that's me, So I do know that and I see that it does make headlines, Mark, but the way they calculate the VIX, those shorter term things are going to roll off. They're going to keep adding the ones. And we're still 29 days? So how many days does the VIX measure? 30 exact days, right? The further we go through the month, you might even see some weird VIX pricing because you'll have post-election VIX and pre-election VIX being priced in.
Did Matt get his coffee in time?
No, keep talking.
Yeah.
Listen, I'm always like, it just always catches my attention when you have market up days and VIX up days.
Yeah.
I've never been able to put together a trading plan formula that's correlated to these type of events. It's just, as a market, junkie, always just catches my attention.
Yeah.
Team Tackle, is the VIX dead or not? We've had this argument for 5 years.
Well, the VIX will never die.
Really? Other volatility indicators have.
Zombie.
Literally, they've died.
Is it a zombie? Just cannot die. I don't want to talk about the VIX right now. I don't have an answer to the question. So we'll wait and see what the Team Tackle says, no doubt about it. But Matt, you think you're in the firm camp it's dead.
I don't have any clue why anybody would read the VIX any longer.
Yeah,
I
Matt's
really
making
don't.
An omelet right now.
I really don't. I have no clue why anybody would read this and think they're getting an edge on the market somehow. I mean, it's absolutely ridiculous. It's absolutely ridiculous. It has not been working forever. Mm-hmm. There's not one thing you're reading on the VIX that you can't read on the S&P 500 chart. Not one single thing.
I wish somebody would do a correlation study with VIX up days and market up days where they're both up substantially and what that means for the next trading week. I would love
y'all can do all that detailed research work you all want, and I'll tell you what the come away will be. Nothing.
No takeaway.
Nothing. No takeaway.
I have too much other work to do than to do that correlation
study. It's lazy analysis. I'm sorry. It's lazy analysis. That's all it is. It means absolutely nothing to the trade you're taking. Nothing.
I don't look at it daily. I'll tell you that. And I used to. So whatever that tells you. I used to look at it every day. Whether that was just being trained that way when I was new in 2005, I think it was more relevant a decade ago, though. I really do. I remember using it quite often.
I don't know if it was or wasn't.
Yeah.
I really don't. Maybe we just didn't know any better. I don't know.
It's possible. It's possible. A couple other headlines.
The VIX plays zero role in my analysis on the market in any capacity. None. Nada.
Think we all know that.
Zero. Yeah. It is lazy analysis.
Yeah.
Oh, I'm done.
We know, bro. We know where you stand on this one. It is not unknown to the tackle trading community and Team Tackle that Matt is in the camp that the VIX is dead. It's lazy and worthless analysis. Correct?
It is worthless.
Right. Yeah. A couple of quick headlines, Matt, as we're kind of getting in on the back end of our show here. Interesting ones for me from an upgrade downgrade perspective. We had one acquisition.
I just keep thinking, Tim, imagine if you still use the VIX in your analysis.
You love talking about it. See, there's something about it, Mark, that Matt loves talking about it. So
no, I don't. This is the first time I've talked about the VIX in like a month.
We had, before that, it was 6 months. So we're talking about it now twice in 1 month. That means we've got a positive
Damon,
trend
we all used to say that. And then some of us grow up.
Yep. That's exactly.
I also used to believe in the tooth fairy, Damon. And I'm not going to talk about Santa Claus because my daughter might be watching later.
Do not ruin a kid's day.
Oh, she's already on the tooth fairy. Like she caught me the other day. So we had that conversation. But no, it's like, no, I mean, it's I'll leave it at that. I'll leave it at that.
I agree. Company news here, Matt, real quick. BMY, if you can, bring this one up. Another acquisition. We saw a few of them last week. We're starting to see some M&A deals and whatnot come through. They bought a biotech firm, Myocardia, MYOK, for a 60% premium against the cost. $13 billion in cash on this deal, bigger than those oil deals we saw last time. BMY is down a little bit on that. Obviously, when you're paying premium for an acquisition, that's going to happen. Don't really have interest in it, but I got a question for you, Matt. Do you think that if we start seeing more M&A deals and acquisitions, over the next little bit, that's a good sign for the market? Are you reading anything into that? Because we have seen 4 or 5 of these headlines in about 10 days.
Oh, I was just responding to the chat. No, I also don't care about Bristol Myers acquisition. I think it's more relevant to the broad market.
Yeah, that's what I'm saying.
Just given the fact that merger and acquisitions are happening, that is a bullish indicator typically. But we haven't seen a rash of.
We're just seeing them trickle in a little bit,
they're
right?
Trickling in.
There's
so
a few more in the last 10 days.
If they happen more and more and more, you could get a little bit more bullish, but it doesn't impact my analysis either.
Yep. Crowdstrike next, a very popular company that we've been tracking on a lot of reports here recently. They're up 4% or so, I believe, in early trading. In fact, they were testing that. They're up about 3.5% right now. Goldman Sachs upgraded the company to a buy from neutral, said they're a technology leader and best in class, in terms of that software space and in industry as well. Matt, you agree? CrowdStrike a buy?
Yes.
I agree 100%. Marky, momentum play here. You got any problem with the
sentiment
trade?
on CrowdStrike has been among the top, of companies for about 6 months now. People love this company. People love it.
Yep. 2 more staple plays. McDonald's here got a little bit of an upgrade. They were up about 1% when I was looking at them earlier. And their 12-month price target from, let me make sure I get the number exactly correct, to $250 from Bank of America, Matt. Price target upgrade to an MCD and then Starbucks. McDonald's first. 2 consumer staple companies. $250 on Starbucks would be an aggressive price target, I believe. But $250 on Mickey D's. Do you feel like that's appropriate here, Manny?
Yeah, I was going to say $250 on Starbucks. Wow. I mean, what are we talking, Tesla?
Yeah, that would be crazy.
McDonald's, I don't think 250 is out of the realm of possibility here on McDonald's in the short term.
Yeah.
I mean, you got to love the potential breakout of 225, 226. Looking at on the daily, it's a little bit overextended, but that shouldn't stop you. The weekly's been very strong ever since 180. You've already achieved the 220 breakout. So for me, 250, I'd have to do a little bit more in-depth analysis on the price target, but just off the top of my head, looking at the chart, I'd say 245 by 250. Yeah.
I mean, we're up 10% since the breakout in late July, early August after that post earnings. So another 10% run on a breakout. If you believe in the company, I got no problem with it. Marky, you interested in
especially if they bring back the McRib,
right?
I mean, Mark's revenue alone will push it to 235.
That's probably true. Marky, interest in this company? It's got to drive through.
I think it could be a nice trade, not from an investing standpoint.
No, it's position. It's position.
I mean, especially if you take a little bit of time off, because McDonald's isn't a classic swing trading stock. I mean, it can't, like, anything can have like nice little bursts, especially in 2020. But if you consolidate here, get you a clean trigger, I think there's something here.
Mm-hmm. Yeah, I agree. Last one for me, Matt. Starbucks here. You brought the symbol up earlier. Obviously, kind of in the same space. McDonald's, Starbucks, consumer kind of product companies. Both got a drive through there, Marquee. Little triple top threatening a breakout there, but they also got some positivity out of Oppenheimer. They named Starbucks as an actionable buy idea. Sees it has attractive earnings power for the coffee company. Maddie, what you seeing here in Starbucks?
Talk me out of 90. I like it above 90, and I like it quite a bit.
I ain't going to talk you out of it. I do think it's a position trade, and I don't mind making that.
I don't mind swing trade here, 90 to 95. I don't mind that. I
just think the nature of the way this one moves, I prefer my preference myself would be position.
Breakout, great swing trade.
Yeah, you could play that trigger. I would have no problem with that.
I don't know. I think maybe we think Starbucks position more because just what we think about the company, but I think a breakout of 90 could be legitimately traded by swing traders and position traders alike.
Quick little $5 target, something like that.
$5 target on the swing trade. Maybe you roll it into the position trade if momentum starts building, but I do like it above 90 here.
Marky, what about you? Starbucks.
I would be quick to take profit, but I think it has swing trading potential. I'd probably target 94 right above that last peak.
That last pivot. Yeah, way back there.
So, and then I wouldn't swing it into a position. I would take profit if I was going to do it, but it's setting up to do that.
Yeah, good looking chart. All right, boys, that's all I got here today. Let's pitch it over to Matt. Matt, anything you want to make sure we hit outside that?
No, getting ready for the podcast, and so we'll be recording the podcast later on today. And this week, Tim, we should get an email sent to the team for both the podcast we did on retirement accounts and the podcast we did on the currency, and get a couple posts out there at Tackle Trading so people can navigate that. So let's do that. After we get done with the halftime show, obviously the next couple of hours we're going to be watching into the close, and then they're about 2:00 right after the close. We're going to be recording the podcast, so definitely get ready for the podcast to be dropped later on tonight.
Yeah, absolutely. I love podcasting on Mondays. We've got a special guest, a good friend of ours, an old trader friend and whatnot. We'll have a conversation with him, and hopefully you guys will enjoy that. He actually has been on the podcast in the past, so kind of a little bit of a hint if you go way back with the podcast.
He's a very eccentric fella.
He sure is very eccentric. In fact, if you are an old school podcast listener, him and I had a conversation about Burning Man about 3 or 4 years ago on that podcast. So
I could definitely see you two, cuddling up in a tent somewhere in Burning Man once COVID gets out of the way.
There's no doubt. Dean and I could absolutely do that. Marky, anything from you, sir, as we wrap up?
I just one cute little note. White House Chief of Staff Mick Mulvaney on Friday on Fox Business said, "We always needed to put Kudlow on TV on your show," referring to Fox Business, "when we needed the markets to go up." Now,
he admitted that?
He admitted that on TV, and we have joked for a long time.
You don't admit that. We all know it, but you don't admit it.
We have all joked a long time that we like to, we refer to Larry Kudlow as Baghdad Bob because it's so obvious when he comes out, it's nothing but propaganda that he comes out. He recently said, "I don't believe our recovery is dependent on an assistance package." I believe that, the virus is just going to go away.
We're going to pass the 5th stimulus package at some time in the next.
No, he just is out there and he's a propaganda machine. And we've joked about that. And it's just nice. I felt like we got technical confirmation on our Baghdad Bob joke.
There is nothing I enjoy more than when Baghdad Bob gets up there and somebody on Twitter does their thing and they put like some rap music behind it and start like mixing it. I love it. I love it. There are sometimes I just thoroughly enjoy Twitter, and that is one of those moments.
So trust your analysis. Don't trust what you hear from whatever those sources are.
Yeah. So you're saying that maybe the television and the ramping and the fake news headlines.
Everybody has an agenda.
Yeah, you're saying maybe
everyone has an agenda.
You should come to Tackle Trading's halftime report instead and get actual analysis about what the market's doing.
Yeah, trust actual traders that aren't trying to.
Kudlow has. I agree with James. Kudlow has zero credibility. None. It probably went away before he became Baghdad Bob, but after he became Baghdad Bob, he is a comical joke, is what Larry Kudlow is. That's all. He's a punchline, is what he is.
It's been that way for a bit. Baghdad Bob, though, I do like that nickname. And we'll keep calling him that. All right, guys, that's our show here for a Monday, 10/5/2020. We're going to have a great week of shows. We're going to be tracking headlines and come back and join us each and every day. Appreciate the thumbs up. If you've not done it yet, give us that click up before you bounce out of here.
Tackle, you guys are the best.
If you're not a subscriber yet, click subscribe, click the bell, come and join us each and every day. We go live whenever the markets are live at 12:30 p.m. Eastern. And if you're a pro member, you know how much we love you. We care about you. We got you. If you need anything, team@tackletrading.com. If you're not yet a pro member, what better day to start? First day of the week here. Click that link down there. There's a 15-day trial that you can come and join our pro community with. Yeah, go ahead.
I lost a bet yesterday, Tim.
I was wondering if you were bring this up. Yeah.
Our good friend Sylvia. I don't know if you know this one yet. Did I tell you about this one?
Yeah, I do know this one.
I did lose a bet to Sylvia. Our teams played. The Seahawks beat the Dolphins. And so I have to wear a Seahawks hat during the halftime show. So I got to go buy a Seahawks hat now.
The Hawks.
She doesn't understand. It wasn't as close as the score indicated, but I am a very, very, very disillusioned Dolphin fan at this point. I just want Tua. Just bring Tua. Just give me Tua. Give me some hope. But what she does not know is I like Seahawks hats. And so everybody wins here.
Mm-hmm. It's a good looking color and hat scheme.
Hey, the 12th man. They got
no problem with that.
Russell Wilson scares the dickens out of me watching him play football.
That was a bad bet. I got to tell
you.
No,
I knew I was going to lose. You think I thought the Dolphins were going to beat the Seahawks? Are you kidding me? No, I never thought that. I'm the fan from Major League at this point with the Miami Dolphins. That's who I am.
I got it. It's good to be a fan, and we're not talking Nick Foles today, so we're done.
Oh, you're off that?
Yeah,
like you two,
not off it.
Biggest Nick Foles fans in the history of mankind.
Guys, we'll see everybody tomorrow. Have a wonderful day, and we'll see you guys on Tuesday. We are out.